All right. Hey guys, welcome back to Crypto. It is February 1st, 2024, 9:56 p.m. Eastern Standard Time. BTC about like a $43,074 on the BLX chart. Okay, so we'll go for the monthly update, the macro update, right? Basically, we'll review the quarterly update. Of course, the quarterly it is still positive. Monthly maintain a positive close. That was a great news. So it is giving the macro uptrend a better outlook for the next like a few months. Remember, we already in the second half of the 4-year cycle. So it's already like 2 years nearly since the over 2 years actually since the bull market peak. And as we discussed, the 4-year cycle starts after the bull market peak, okay, not at the bottom. So you can look at it in two different ways, right? As we discussed before, we said it multiple times, right? You got a 4-year cycle from the peak, right, 2021 to 2025, right? Let's say to 2025, and then you got a 4-year cycle from let's say right there, 2018 to 2022. So if you connect the bottoms, it is 4 years. If you connect the top, it is 4 years. If you connect the top from 2017 to 2021, it is also a 4-year cycle. So that's why we been saying like, okay, the last third, right, of the 4-year cycle tend to be the most volatile one. Okay, meaning like in a 4-year cycle you got 48 months. So 1/3 of 48, you got like what, 16 months, right? So the last 16 months going to be the most volatile one. Okay, but it is not good. It is not a good idea to wait till the last 16 months to be highly confident. Okay, you got to be ready. Let's say 12 months into the 4-year cycle, which is like the first 12 month drop, you start anticipating the next like a 36 month. Within the next, within the 36 months of the uptrend, you basically navigate the market bullishly. You see what I'm saying? So the 4-year cycle is very easy to understand. The problem is like if you just follow the lower degree, like a daily and lower, you could get confused, okay, and you might miss the next big move, because once BTC starts to move, it doesn't move like 2%, 3%. It can move like 18 to 25% in one day. And by the time you wait for another pullback, it could take like another 2 to 3 months before it retraces, let's say 15 to 20% and all that good stuff, okay? So that's why I'm saying we are, in the second half of the 4-year cycle and likely to get, into the basically last third of the 4-year cycle, which is the last 16 months of the 4-year cycle. So last 16 months, you would be looking at like let's say like August. So basically August, right, we should expect like the volatility to be highly up, right? Because from August, right, August 2024 to basically let's say October, December, I would say let's just say December 2025, right? The volatility will be crazingly to the upside. It doesn't mean like BTC will stay in this range, right, for the next 6 to 7 months, right? So it only means like the type of move we're most likely going to get based on the 4-year cycle after August, right? It is not going to be something like we've seen previously during the during the uptrend. It is going to be the most volatile one, kind of like what we've seen right here. If you recall back in October 2020, when we said once we break out above 10.5 before October 2027, I think, something like that, when the 50-day cycle was closing, we will get a zero resistance. So we don't know in this area what type of structure we're going to get. Could we still be below like a 58k or at or below 58k by August? That's possible. Okay, that's possible, but I don't know what type of structure it will print by August, I meant, okay? But one thing we know is like the upside momentum, it is still there. If we take a look at it on a quarterly basis, you can see like the quarterly resistance we discussed, we discussed previously. If you guys recall, we talked about like the 45k, 48k area going to be a quarterly resistance. If price gets there, you would be expecting like price to face some sort of like a correction, not a reversal, okay? Because we cannot basically pump like every quarter. Like let's say the first quarter of last year, BTC pumped like, let's say 72%, okay? Last quarter of 2023, it pumped like 56%. So we cannot be pumping 50% to 70% every quarter. Okay, that's not just sustainable. I would be expecting like some quarter we might only be pumping like 10%. Okay, but the volatility could be more than 10%, meaning like from the entire amplitude from low to the lows, right, to the peak, it could be more than 10%, right? But what I mean is like the body candle could just be like a 10%, right? As you can see right here, the amplitude is like 26%, right? But price action is, in terms of like a closing, it is nothing but like what, less than 2% right here, the body candle. You see what I'm saying? So it makes sense for BTC sometime to slow down, right? To slow down the volatility and all that good stuff, right? But on a quarterly basis, everything looks good in terms of like a elite wave. If we just take a look at it on a quarterly basis, we discussed the wave 3, right? This is going to be our wave 3, and the extension going to be all the way up to the 1.618 extension going to be all the way up to like nearly 80k area, right? So it could be higher, it could be slightly lower, but the directional trend, over the next like a few quarters is likely up, okay? And one thing we also have to think about is like with these macro bullish reversal on a quarterly basis, it doesn't take like it can take like a multiple quarters to basically wipe out one bullish quarterly cycle. It means like, what does it mean? It simply means, if you take a look at it right here, the last quarter of the bull run, the first quarter basically of 2021, you can see like it took 5 quarters just to take out the quarterly open right here of the January 2021, right? So you can see like the quarterly breakout we had right here, we could not even retest 50% of it because market was absolutely confident like, hey, the bull run has started and we're not even going to drop 50%. We're just going to create a bull flag on a quarterly basis. It was nothing but a bull flag because most people don't trade the quarterly. They don't have time. They don't have the patience, right? And they're not patient enough to basically wait for a month or 3 months for the breakout, right? So and sometimes BTC might just be moving sideways based on a quarterly basis. You might be expecting 10% drop, and it might not even drop for 5%. It might not drop more than 5% for like a 3 month. You see what I'm saying? So something to basically keep in mind in terms of the quarterly basis. The takeaway on the quarterly basis is like it is bullish, but it is at resistance, and we were expecting the 45 to 48k even on a lower degree, right, to be some sort of resistance up to 52. So I'm not surprised, right? BTC struggled in the first month of the first quarter of 2024 to break out above the key level of resistance right here. But we will see, because the next level of resistance, right, if we just take a look at the quarterly, it is going to be at 50. If we just draw a line right here, you can see like the dotted line right there, right? Resistance is around like a 58, give or take, okay? Because this candle right here open around like let's say 58.7, so which is at the same time the 0.888, right? We talk about it on the low degree. If you do a swing low to swing high, the 0.888, right, it is right around like a 57k to 58k. So after after BTC takes out 45 up to 48k area, right, the next level of resistance going to be 57k to 58. It doesn't mean it cannot take a nice pump above it and all that good stuff, but what we're saying is like it is going to be showing some sign of like a correction on a lower degree. It could be on the weekly down to the 3D, or it could be like from the 3D down to the daily, but we should be expecting some sort of like a consolidation on the lower degree once we get there. If we don't get it, we know, okay, the bull run going to continue, and we got a bigger target up to like 150 to 180k. Okay, the downside support, the only downside support I'm watching, I mean, you could watch multiple downside supports, right? But just to oversimplify it, right, the weekly Okay, we already discussed the 3D. The 3D already held pretty well at 40K and price action broke out to the upside. But since like we're talking about the quarterly, let's just say the weekly 21 EMA, right, on a monthly basis, going to be a support. That's going to be the primary support, since like we already retested the 3D 21 EMA on the lower degree. All right. So if we go ahead and take a look at the weekly, and then if we leave it on the quarterly, right, you can see like the weekly 21 is right there. Okay, so it is right around like a 37.9 if you're using the BLX. It doesn't matter which exchange you're using, but I would just say 37, 30, you know, 38 to 37K, or even down to 36, right, depending on the volatility. But you just have to watch it on a monthly basis, right? Cannot just watch it on the weekly, because as long as the body candle of the monthly time frame doesn't close below the weekly 21 EMA, we could still say, okay, the trend is up, and every dip it is just going to be some macro support. And as you can see, if we go on the lower degree, the white line right here, I tried to explain it previously in one of our weekly update. You can see right here. Okay, so when BTC started to print the bearishness right there, and also many bears starting to call for like a 10K, 5K, 3K, and 1K and all that good stuff, that's when I was like, okay, let's just clarify what's going on. This way we're going to zoom out and basically focus on the bigger picture. Otherwise, you know, a red monthly candle can flip most people bearish. You see what I'm saying? If they see a monthly bearish candle, they're going to be like, okay, we're going down. But I warned most of, you know, the members previously, even before the bearish monthly candle started, I was like, we will get some bearish monthly candle, but we just have to know how to read it. Okay, how to read it. We just have to know how to read it, right? A bearish monthly candle is not bad as long as we're not closing, you know, a body candle below the monthly, you know, below the weekly 21 EMA, right, is good. Okay, it is a good sign. That's why I was anticipating, saying like, okay, you know, support 3D and weekly 3D 21 and the weekly 21, just in case. Okay, the body candle of the monthly time frame does not close below those supports, right? And the earlier we retest those supports in the monthly time frame, the better it is. So we don't want to retest those levels like, let's say, you know, around the 26th, 27th, right? Stuff like that, right? So we want to retest those like, let's say, before the 15th or like before the 18th. It doesn't have to be exact, but what I'm saying, like in terms of the timing, the earlier price action, it doesn't matter to me whether it retested or not. But I'm just saying, I'm just giving you guys some examples, like, you know, in terms of timing. It's hard to time the market, but at the same time, you can try to read how market is performing based on the monthly close and you know, monthly open and all that good stuff, right? Because we don't want to basically close bearishly on a monthly time frame, closing below the monthly 21 EMA, below the, you know, below the weekly 21 EMA on the monthly. That's not a good sign. Okay, even though we are in a bull run since like November 2022, those are not signs to basically enhance our probability to continue the macro uptrend. Hopefully it makes sense. Okay, so if we stick to the monthly time frame, it is still looking good, right? Nothing to say in terms of like a RSI. We around like a 62 on a monthly basis. So we discussed it when RSI was around like a 43. Okay, so we're not seeing anything. We're not surprised about the move from like a 15K to like a, you know, and now looking for 58K. Okay, so I'm not surprised at all BTC is making this move. The only people who are surprised about this move, you know, are the bears, okay, who are waiting for like a 13K, 14K, 10K, 5K and all that good stuff. Yes, price action could have dropped lower down to those lows. However, you just have to play the probability. Okay, for instance, when we go up to like 180K, could we go higher above 180K? Yes, we could go like to 250 or even $300,000. Okay, that is a possibility, but the risk, okay, going to be very, very high, right? To be buying around, okay, this area of you know, let's say 100K and 180K and higher. Okay, at those levels, right, is like to chop off profits, like be like probably like 90% out of the market and only hold probably 10% or less, and just wait for the following month or like even quarters, okay, to wait for a you know, a clear directional downtrend. If it goes higher, we will see how to play it, but the risk is going to be high. I'm just trying to tell you guys because I know even for myself, trying to remind myself also, like to say this stuff to remind myself how bullish market can be, right, around the bull market peak. Okay, it is hard to basically get out when you see like everything pumping like 50%, 150%, 200%, like in one day. Okay, you're like, okay, it's not time to get out. We still got 3 more weeks, 3 more months. And market all of a sudden going to humble you and basically drop like, 70%, 80% like in 1 week. We seen it back in May 2021 when BTC crashed like, nearly 50% in like 1 week and stuff like that. On a monthly basis, it dropped like 35%, stuff like that. Okay, so just gotta be ready for both scenarios, right? And the upside scenario, right? And at the same time the downside scenario, right? Before even we start the reversal. Okay, so sometimes it is just not about TA, but sometimes it is about like risk management, right? Of course, risk management is part of TA, but you know what I mean. So sometimes it's not just about like directional moves. Okay, so it is not just about like we're going to 1 million or we're going to 2 million. Sometimes just have to know how to say, okay, let's just pack our bags. Okay, we could get a 12-month downtrend and we will basically trade the market downwardly, right, all the way down to the quarterly 21 EMA. Okay, we already got the template. We already know how to basically trade a bear market. Okay, we know how to trade a bull market, right? So, and this bull market right here is totally different to our last bull market. Our last bull market we did well. However, this bull market we started like for BTC literally at the bottom, and for most alt literally at the bottom. For most alt they bottom like around like when October, November, December, last quarter of 2023. We discussed it like 6 months, even 9 months before, right? The fourth quarter of 2023. Okay, fourth quarter of 2023 was the alt accumulation final phase, right? Based on the 4-year cycle, and 2022, fourth quarter of 2022, right, was the final accumulation phase for BTC because of the 12-month bearish downtrend we were expecting. Okay, those are just some templates, right? We just have to remember, right? We know like once BTC retests the monthly 21 EMA after the bull market, it tends to drop like 40 to 50 or even 60%, meaning like what you see right here, right there and right there, and right here, excuse me, all right, and right here also. Okay, so we discussed all of that. It is one of the most important key indicator to watch during the downtrend. That's how you're going to be like 95% confident, like, okay, BTC will drop down to its quarterly 21 once we get a monthly body candle closing below the below the monthly 21 EMA. Sometimes you might be even confident enough not to even wait for the for the body candle to close below the monthly 21 EMA, like what happened right here. We were basically anticipating it like on the 3D, because I remember back then we were saying, hey, if the 2D MACD cross negative, right, after the I think 2D or daily MACD cross negative after the double top double bottom on the low degree, we will basically be capitulating down to the 25k from like 41. Okay, and after that we said, okay, down to 18k to 19k. But those moves we're not gonna get them possibly, okay, until the next like a potential bear market. Okay, I know it is not the bear market, but it is always good to remind ourselves, okay, what's coming up next in the next like a few months, right? However, in a short to medium or even long term time frame, on a monthly, on the weekly up to the quarterly time frame, the trend, it is still up. Okay, so the monthly 21 EMA is kind of deep. It is around like a 32,626 as of now if you're using the BLX chart, right? So that's why I'm not basically I'm not paying attention to it right now, because we're still above the above the weekly 21 EMA, right, on a monthly basis. So the weekly 21 37.9, right, 37,936, right? If you're using the BLX, right? If you're using another exchange, just have to basically follow it, okay? So I think that is it on a monthly. So we don't need to go through the Elliott wave count when using the monthly, okay? So in terms of like a RSI on a monthly basis, it is still looking pretty good. I don't see anything crazy, right? So you know, I don't see anything crazy on a monthly RSI. The most important key level on the RSI was the you know, below the 43 right here, and we discussed it when, you know, that was back in, you know, back in August 2022. That's like 18 months ago, right? Because that's when I really started to basically do the monthly update, because I wanted to basically stay constant on a monthly basis. Because if you know what the monthly is doing, right, you got a high probability to know what the quarterly is doing, and at the same time you can anticipate, right, based on what the daily up to the weekly time frame is doing. You can anticipate the monthly close or how the monthly could be reacting depending on the close and all that good stuff, okay? And the location of your weekly 21 EMA, the location of your basically a monthly 21 EMA and all that good stuff, okay? So overall it is looking pretty good, right? So we'll see how it goes. One thing you could also pay attention to is like, you could basically pay attention to let's do this. So the 20 SMA and the 21 SMA crossing bullish, right, and bearish, right? When you got the you know, in a downtrend, right, we already discussed it in terms of like a total market cap, right? When they cross negative, we capitulate. When we cross positive, meaning like the 21 EMA above your 20 SMA, we in a bull run. As you can see right here, I did not use it back here, but we were anticipating a big move. So right here you can see, like, you know, it crossed positive, right there. Even though we got a slight dump to the downside, bang, we pushed it upside. So as long as these two moving averages on a monthly basis, they're keeping a positive momentum to the upside also, we could just say like any short-term pullback on the monthly down to the weekly time frame, it could just be, you know, some short-term pullbacks, right? Because in a bull run, BTC doesn't usually retest the monthly 21 EMA. That's why I don't want to focus too much on it. It doesn't mean like it cannot, but I just don't want to basically spend too much energy, or energy is basically anticipating something that has a less probability of playing out, okay? The only way we could basically start to target the monthly 21 EMA is like if we basically get some bearish, okay, some bearishness around the weekly 21 EMA. We could say, okay, the monthly 21 EMA is a potential support, okay? But as of now, the secondary, I would say the primary support is the weekly 21 if we get any shakeout, okay, before going up to the next big resistance around like a 57 to a 58k right there on a monthly and quarterly resistance, right? So hopefully it makes sense, okay? So even if you back test it right here, the yellow line, your 21 EMA above your white line, you get a very parabolic moves, okay? A very parabolic move. 2017, you can see it was a clean breakout to the upside, right? And the downside is not that long. It is roughly around like a 3 to 6 months, right? So it's not that long, okay? When you get the 21 EMA crossing below the 20 SMA, right? It doesn't last that long, okay? But once they cross positive, it could stay positive for like 2 years, right? As you can see right here, it crossed positive somewhere around like September 2019, and it crossed negative around like let's say right here, right there, right, February 2022. So right there, so nearly 30 months, okay? It took like 30 months, okay, to cross negative, right? So I'm not saying it will take 3 years again, 2.5 years, and again basically before the next cross, the next negative crossover, but something like, something we could basically something like we could basically pay attention to. And based on the 4-year cycle, it could even be like a, you know, it could take that long to cross negative again, okay, by October 2025. But I don't think it'll take 30 months to basically cross negative, right? I don't think it'll take 30 months, because by October 2025 we would be bottoming, okay? And the only way it will cross they will cross negative again by October 2025, right here. No, it's impossible, basically, based on a 4-year cycle, right? It's impossible, okay, to cross negative, because we should be peaking right here, so it should be crossing negative somewhere around here, okay, somewhere around there, right? So but that's what I'm saying, like, I don't expect it to play out the same way, but whenever we see it, we just know, like, hey, we're about to get a potential big drop to the downside, okay? But as of now, it is signaling you know, a positive momentum and all that good stuff, right? So let's dive into the lower degree. Let's say the weekly. So if we take a look at the weekly time frame, as we discussed on our short video update, okay, the weekly, you know, it is just, you know, you can see, like, it is just a consolidation, right? So we got a reversal weekly candle right here, and all the bears you know, started to call for 5K, 3K, 1K, and all that good stuff. And you can see it basically bounced off the 3D 21ema. I already talked about all that good stuff, right? Let me just remove this one. Okay, you know, it hit the 3D 21, even closed a body candle right here, and but did not retest the 3D 50, which is, you know, your weekly 21ema, and got the bounce. In terms of wave analysis, we discussed it. We said, you know, it will bounce back up, okay? It will either bounce back up from the 3D 21 or from the weekly 21, or it could even bounce back up in between, okay? So sometimes we just don't know where you're going to get the bounce exactly, but you just have to respect the supports and all that good stuff. For instance, you know, this move could be as I discussed, it could be, you know, even the B wave could even come all the way up to retest the 50K and give you another C wave where you get the you know, where you're going to get the flat, or it could, as I already described, right, it could basically do something like that, or even a wedge. So we don't know what type of pattern it will do. But if we dive into the 3D basis, right, you can see, like, you know, based on the MACD, right, it is saying, like, we're still in a correction phase, right? Regardless of what correction phase we're going to get, right, which type of correction we're going to get in this correction phase area, right? The 3D MACD is saying, like, you know, don't fall for it, even though your macro trend is saying like, okay, you are bullish, right? You just don't want to basically fall for the you know, sideways correction. Once the MACD crosses positive, then any pump, right, could be respected. But as of now, price action could be in this range for the entire quarter, okay? Because if you go back on a quarterly basis, nothing is saying, like, hey, the quarterly time frame might not close like that. It could go all the way up to 50K, right, in, let's say, in March, right, and I mean in February, right, and in March it comes right back down, right, and close around like a 40, 42, 43. You see what I'm saying? So the 3D the MACD will just be like, you know, I really don't care what you guys doing, I'm still staying the same. You see what I'm saying? Because if price action goes up to 50K, right, in February and comes back down in March, right, the quarterly time frame will be, you know, will be intact. It's not going to be impacted. You see what I'm saying? So if you go on the lower degree, let's go back to the lower degree. So it will look like that on the lower degree, meaning like price will go all the way up, let's say, for the whole month of February. I'm just giving you a hypothetical example, right? And then comes back down, right, and close somewhere around here in March. That's also possible. Or price could basically, you know, on a quarterly basis, right, let's say price in February, right? It could go all the way down, right here in February, and close February, the month of February bearish, right? But might not close below these lows, right? Let's say you just get the wick, okay? And in March, right, it goes right back up and close right there, right here. You see what I'm saying? So it could alternate, right? You don't know which one will play out, but it could alternate on the monthly basis. But it might not impact, right, the quarterly time frame, the bullishness of the quarterly time frame. Okay, hopefully it makes sense, right? So you can see like how I'm just drawing it, right? If we go back on the lower degree, it'll look something like that. Okay, let's say price drop right there, right, anywhere around here, okay, right, and close the month of February somewhere around here, right? But let's just say somewhere around here, okay, with a wick to the downside. And in March, it could just basically goes right back up, okay, or even pump right back up, but just close somewhere around here, just to keep the quarterly time frame as it is right now, okay? So hopefully it makes sense, okay? So just be patient, right, for the entire quarter, regardless of which pattern will play out. Don't get trapped. Don't get fully committed, right? Especially on the bearish side. But on the next 12 to 18 months, I'm fully committed, right, to the upside. But in within the next like 1 month to 2 months, we could get a sideways-ish correction. If we don't get it, great. Let's say we get a quarterly breakout, February basically closes above, like, let's say 53. Great, because our target is 58. Okay, we just have to wait for price action to hit 58 to take some more profits and allocate into alt again, okay, and all that good stuff depending on the volatility, right? So I think that is it, right? We covered BTC on a quarterly all the way down to the weekly time frame and 3D time frame, right? I covered BTC on the daily and I think weekly and lower yesterday. So if you want to basically check out the short video update, I think it was like 11 minutes, something like that, 10 to 11 minutes. So it was a short one, okay? So you can basically watch that one for the lower degree and the correction. But the most important I wanted to cover for this month, for the monthly update is like, just be constant. The trend, it is still up. The sideways-ish correction could be boring for the rest of the quarter. It may not, right? But just anticipate boringness, right? If it is not boring, right? We get the volatility to the upside. We know our upside target, and we at the same time know our downside target support if price action retest those lows, okay? That's why it is always good to enter the trend early, not when the trend starts to go up. That's why I was insisting right here, saying like just accumulate 16K to 18K, okay? 19K to a 16, 18K, anywhere around this level, because our next upside target, the macro, the big target will be 150 to 180. That will give us our 10x move, okay, on BTC. And on alt, it could be 40x, 50x, right, depending on the entry point for most of those alt, okay? All right, guys, so I'm just gonna keep it short. If you have any alt you want to discuss, just put it in the chat room and I will take a look at those alt, okay? All right, guys, thanks a lot for watching.